Israel launches attacks on Iran's nuclear facilities. They went ahead and targeted their nuclear program and military leadership, killing top figures. The strikes targeting nuclear and military sites, commanders, and scientists with multiple waves of attacks. And this situation is still ongoing. This event that happened on Thursday caused a lot of volatility and a lot of price movements in the market. So in this weekly outlook, I'm going to share to you top setups that I'm looking at, things that I'm going to trade, and some key tips to go ahead and help you navigate this market of pure uncertainty. So stick around. I hope I can provide some value. We can see that when this happened, oil just skyrocketed, and from bottom to top, it actually topped out at about 12%. We pulled back a little bit, but we finished with a bullish candle here on oil. Also, one of the interesting things that I saw, so we kind of know this already, but the dollar has been selling off for a lot of different reasons, right? The tariff uncertainty, the dollar being the main aggressor, so that safe haven status kind of was taken away from the dollar. Also, just not a couple misses in expectations when it comes to economic data. Traders are starting to price in those rate cuts as soon as September. The dollar has seen a ton of weakening. If we zoom out here, it's been continuous for a long time, right? And if we zoom in a little bit, the dollar, per usual, the dollar was starting to sell off. And at 7 p.m., whenever that news hit the street, dollar went ahead and rallied. And if we look at relative strength here to the right, the dollar continued to dominate for this session ahead. Dollar yen was doing well, dollar Swiss was doing well, dollar CAD actually ended red, and I want to talk a little bit more about that later. Yeah, so it seems like the dollar kind of went ahead and regained this safe haven status, at least for now, in my opinion, because we have these war tensions coming up here. So I don't trade oil, but I'm part of a group, the A1 Trading Group, and I am a market analyst for them. And I send chart markups and things of that nature. And US oil was one that I really liked, right? We sold off here. We were kind of ranging. We started to range above this 50-day moving average. And this is pure technicals, by the way, that I'm going over. We were, hovering over, kind of tightening up here at this level of resistance, now turn support. And also for oil, right? Summertime. There seems to be just historically lots of demand for oil that drives up that price. You have hurricanes in the Gulf that if they do come and they disrupt supply chains, they can also hike up the price. And also just the Russia-Ukraine, just conflicts in the Middle East in general. All of those economic factors fundamentally, it seemed like oil was a great trade, and that actually ended up happening, right? This big move that we saw all the way up to the $77 handle, that was just added fuel to the fire to what was already a really good trade. So if you are in that Telegram channel and you're watching my daily market chart write-ups, I hope you took that trade. If not, oh well, there could be continued opportunity, and I'm going to go ahead and talk about that now. So let's go ahead and look at the fundamentals. We'll go look at the COT data. Oil got bought up, Canadian dollar got bought up, euro as well, so US dollar got bought up. So lots of buying here. For the S&P 500, which is equities risk on, we saw continued selling. So last week there was 11,000 short contracts added to the market, and if I remember correctly, 6,000 long contracts removed. We went ahead and removed 34,000 long contracts and added 23,000 short contracts there. So I was anticipating, I said this before, that perhaps we can get some kind of news flow to top out this all-time high level and kind of send us lower for a healthy pullback. It seems like that's what's going to happen. And in my opinion, if tensions continue in the Middle East, we can continue to head lower here, potentially buy at this level. Same thing with the NASDAQ. We kind of tapped these all-time high levels, not quite all the way all-time highs, but we got to this level of resistance, pull back lower. I'm interested to see if we stay below this 50-day moving average and we trade lower, we can get a buy opportunity here at the 20,000, give or take, and then take it to the upside. So we'll see how that develops. Now, if the tensions continue, and all hell breaks loose, then perhaps we can flush a little bit lower. Regardless, even if we get kind of low, from bottom to top here, peak to trough, even getting down to somewhere right here, 50% retracement is still a healthy thing. So that is something I'm looking out for. On the equity side of things, dollar, we can see a little bit of a upside move, perhaps up to this trend line, this 50-day moving average. Continue here. We'll see how things progress. If things progress worse, we can see a break and retest, and perhaps we see a shift of change. Another thing I was anticipating as well was more of a bear trap situation. We flushed the recent lows and then buyers get in here. So I don't know if this was a coincidence in timing, but we'll see how that reacts. So I'll probably see the dollar at 99, see how that reacts. If the sentiment is still current as far as risk off, we could see the dollar continue. If we get up here, things resolved, then traders start to price in those rate cuts. The Fed gets more comfortable. Then we can kind of sell lower down up into this 96, 95 area. And this level that I have in orange here, we kind of go to the monthly time frame, zoom out, that is still in the uptrend for the dollar. So I would like to see this would be a really good low if we get here. I would say good risk to reward, and trade up to this level right here, at least the 101. That will be a really good percentage right there. That'll be a 4.86% move. Right, if we're looking at the euro, that'll be really nice. So just to keep an eye on the dollar there. So that's pretty much my thought process. But let's go ahead and look at, this is a good tool right here that we have on the Edge Finder. It's a risk on, risk off gauge for those that don't know. And I want to just dive deeper into the environment that we're in. So when we see these really big flows, right, these big movements, it's usually because we're shifting narratives from a risk on to risk off sentiment. The biggest moves, the biggest catalysts usually is because of that. And with this cool tool here that we have, it kind of shows us that we are already on risk off territory. A lot of it because of the VIX and the put to call ratio and just other factors that we have. And it shows you which assets perform really well on risk off, right? We have Swiss, yen, dollar, gold is also something that I'm going to consider as a risk on. For now, it's showing here on the bear side, but it might go ahead and shift here in the future. On the bear side, risk on currencies are Australia, Euro, CAD, New Zealand, equities, S&P 500. And I want to touch a little bit about the CAD. As I mentioned before, I think there's a really cool opportunity with the Canadian dollar. So let's go ahead and get into that here. So whenever we're trading currencies, you're considering two economies, two variables in the equation. You have one and two, right? So you're either buying one, selling the other. And to get the best move, you want to buy the strongest currency and sell the weakest one. The bigger the divergence, the bigger the spread in those two relationships, the better the move, the more lucrative it's going to be. If we look at relative strength here on the, just how we ended the week off, we can see that on the right hand side, we saw, like we mentioned, Aussie, Euro, Pound, New Zealand, with the worst one being the New Zealand dollar. And then on the dollar side, interesting because dollar and the yen are both risk off currencies that perform really well in those environments. Dollar and the Swiss are also risk off currencies that perform really well. So the only one that ended off bad for the dollar was the dollar Canadian. And the thing that I was going to get to with the dollar Canadian is that the dollar Canadian is somewhat correlated to oil in some degree. Not 100%, but oil and Canadian dollar have a relationship where they tend to move in sync. And so with oil doing really well, the Canadian dollar also did really well. If we kind of just look at Canadian dollar futures here, that is a terrible chart to reference. Holy smokes. Let's look at 60. There you go. Canadian dollar futures, continuous contracts here. It has done pretty well, right? Despite the peers. So Canadian dollar really took the reins here. That's why the dollar Canadian ended off in the red. Knowing that, right, in my opinion, the best way to approach this level, I want to isolate the weakest and the strongest, right? So we know that oil, right, even though I don't trade oil contracts, we can trade oil in some way if we're trading the Canadian dollar. So I want to sell New Zealand dollar and buy oil. But how can I buy oil? Well, I can buy it through the Canadian dollar. So that's what I did. Sold New Zealand dollar, bought the Canadian dollar via selling the New Zealand dollar CAD. And we are a little bit in profit here. So this is basically the basis of my trade. I'm going to put these moving averages on there. Let's do the 50-day and the 200. And we see that on a technical basis, if we go down to the 4-hour chart, the 50-day moving average and the 200-day moving average, the price was below that. We see this week here, we tested that 200-day, flushed down, really big wick, small body candle, and we finished the week with a 4-hour red bullish candle. Now this is a level of support. If we break this level and we get something like this, break, retest, this level holds, we can go ahead and target the downside. Now this is a really nice move nonetheless, right? From here to here, that is a nice move. But notice how I'm not targeting the very lows, right? I don't want to get greedy on this trade because sentiment can shift very, very quickly. Whenever there are these big catalyst moves, these big events, all it takes is one person with power, with influence, to say things are resolving, things are getting better, the war is ending, for that sentiment to go from risk off to risk on. And that move can happen pretty fast. So that's why I'm only targeting the 61% level, maybe this 50% level. Now, if things get worse, and this is one of those things where the time horizon keeps getting stretched out, now other countries are involved in the war, this thing's going to be a 2-3 year ordeal, then perhaps I can go ahead and move my take profit, maybe even lower to the lows or past that. But for now, I want to be mindful. I want to be considerate of the risk that I'm taking on, and say I'm only going to target this level here. And this level here is not a bad level, right? This move from here to here, that's 153 pips. I will take that all day long. So my preferred pair is the New Zealand CAD, and we can also confirm this with our edge finder here. If we just look at the top setups, here it is, New Zealand CAD. New Zealand CAD, bearish reading here. Aussie CAD, so Aussie and New Zealand are pretty similar as well. Aussie CAD is -10 reading, so that's another opportunity as well to participate in this environment. So we'll see how things progress come Sunday night or Monday. We'll see if things are getting resolved. But if things keep escalating, then these trades can work out pretty well. Now let's look at the opposite end, right? We always want to make sure that we're addressing the both sides of the coin. What can go wrong for me? What if things get better? Well, if things get better, then the dollar can continue its decline. Perhaps we get something like this. Boom, boom, boom. We hit this level of support that's now probably going to turn resistance, and traders continue pressing in those rate cuts now that global uncertainty is behind us. The thing with tariffs, the China thing has been progressing as well. So we can kind of expect that to happen if things resolve in the Middle East, and then we can target that higher time frame trend line, the monthly, this 96 level, or even maybe a little bit below, right? Sometimes when you hit these big levels, you get a little bit of a fake out, you get some stop losses get hit on the higher, bigger institutions or whatever, or a rebalancing act. And then you fake out a little bit, then you kind of buy in there. So that is what I would do. Thank you guys so much for watching. Have a blessed one. Safe trading. Bye-bye.